If you have ever heard that the rich and elite of our society have multiple streams of income, and that figure lies around 7 or so, then you are correct. It's so because most of the rich people have a mindset that makes them rich. Their mindset urges them not to depend on only one source of income, which at drastic times could be bad. Let's consider it this way. If you are someone who is living a 9-to-5 job and are dependent on a paycheck for a month, then you are constricting yourself. While the average man keeps on living like this for his whole life, the rich tend to build multiple streams of income, and most of the elite people have at the very least 7 streams of income, which allows them to be independent and autonomous. They are not dependent on just one source, rather they tend to diversify so that they can live a better and extraordinary life. Let's dive into the lives of the rich and find out what kinds of income streams they have. If you also want to be financially independent and rich, then take a look at the various kinds of income streams of the rich. Here are 7 income sources that rich people often have. 1. Earned income. 2. Passive income. 3. Portfolio income. 4. Residual income. 5. Dividend income. 6. Interest income. 7. Capital gains. Number 1. Earned income. Earned income is the income that individuals receive from working a job or running a business. It is often the primary source of income for most people, and it is typically fixed at a higher rate than other types of income. This is the primary source of income for rich people. Earned income can include wages and salary earned from working as an employee, as well as self-employment income earned from running a business. It can also include bonuses, commissions, and other forms of compensation received in exchange for work. Earned income has a number of benefits, including immediate income. Earned income is typically received on a regular basis, such as weekly or bi-weekly paychecks, which can provide a reliable source of immediate income. Potential for advancement. Earning a wage or salary from working for an employer can provide opportunity for career advancement, which can lead to higher income and increased job satisfaction. Job benefits. Many people offer benefits such as health insurance, retirement savings plans, and paid time off, which can be valuable to employees. Sense of accomplishment. Earning a wage or salary can provide a sense of accomplishment and contribute to an individual's overall sense of financial stability and independence. Potential for tax deductions. Earned income may be eligible for tax deductions, such as the standard deductions or deductions for business expenses if the individual is self-employed. Number 2. Passive income. Most of the elite people have multiple passive sources of income, which helps them to gather wealth with little or no energy spending with the passage of time. Passive income is income that is generated with little or no ongoing effort. It's the income that is received on a regular basis but does not require the recipient to be actively involved in the work of generating it. Examples of passive income include rental income from properties, dividends from stocks, and interest income from investments. Passive income can also be generated through business ventures in which the individual is not actively involved, such as through royalty income from books, music, or software, or through network marketing or affiliate marketing. Passive income is often attractive to individuals because it has the potential to provide a regular source of income with minimal effort. This kind of income has potential benefits, including passive income provides a regular source of income without the need for ongoing effort. This can free up time and energy for other pursuits. Passive income has the potential to provide income even when the individual is not actively working, such as during retirement or when taking a break from the workforce. Passive income streams can be diversified, which can help to spread risk and potentially increase the chances of earning a steady income. Passive income has the potential to increase over time, as some passive income streams, such as rental income, have the potential to increase with inflation. Passive income may be eligible for favorable tax treatment, depending on the specific type of income and the individual's tax bracket. Number 3. Portfolio income. Portfolio income is income generated from investments such as stocks, bonds, and mutual funds. It can include dividends, interest, and capital gains. Dividends are payments made by a company to its shareholders, typically in the form of cash or additional shares of stock. Interest in the amount paid by a borrower to a lender for the use of money such as the interest earned on savings accounts or the interest received from purchasing bonds. Capital gains are profits earned from the sales of assets, such as stocks or real estate. Portfolio income is typically subject to federal and state income taxes, as well as taxes on dividends and capital gains. The amount of tax paid on portfolio income depends on the individual's tax bracket and other factors such as deductions and credits. Rich people often have a significant amount of portfolio income, as they may have a diverse portfolio of investments that generate income. The following are some benefits of portfolio income. Passive income. Portfolio income is often passive in nature, as it's generated without the need for ongoing effort. This can free up time and energy for other pursuits. Potential for appreciation. The value of investments in a portfolio may increase over time, which can lead to profits through the sale of investments. Diversification. A diverse portfolio of investments can help to spread risk and potentially increase the chances of earning a steady income. Inflation protection. Some types of portfolio income, such as dividends, have the potential to increase over time, which can help to protect against inflation and ensure that retirement savings keep pace with rising costs. Potential for tax advantages. Depending on the specific type of income and the individual's tax bracket, portfolio income may be eligible for favorable tax treatment. Number 4. Residual income. Residual income is income that continues to be earned even after the initial effort has been completed. It is income that is generated on a recurring basis but does not require ongoing work to maintain it. Examples of residual income include royalty income from books, music, or software, and income from network marketing or affiliate marketing. In these cases, the individual creates a product or performs a service once and then continues to earn income from that product or service on an ongoing basis. It has various potential benefits, including financial stability. A consistent stream of residual income can provide financial stability and security, helping you to plan for the future. Opportunity for growth. Residual income can provide an opportunity for financial growth, as it allows you to reinvest your earnings and potentially earn even more income over time. Flexibility. With residual income, you have the flexibility to choose how much you work and when you work, as the income continues to come in even when you are not actively working. Security. A reliable stream of residual income can provide a sense of security, as it can help to protect against unexpected financial setbacks. Number 5. Dividend income. Dividend income is a type of income that is received by shareholders of a company in the form of a payment. Dividends are usually paid out of a company's profits and are typically distributed on a regular basis, such as quarterly or annually. There are two main types of dividends: cash dividends and stock dividends. The cash dividend is a payment made to shareholders in the form of cash, while a stock dividend is a distribution of additional shares of stock to shareholders. Dividend income can provide numerous benefits for investors, including passive income. Dividends provide a passive income stream for investors, allowing them to earn money without actively buying and selling stocks. Potential for growth. Dividends can provide an opportunity for financial growth, as reinvesting dividends can help to compound returns over time. Diversification. Dividends can provide diversification for an investment portfolio, as they can help to balance out the risk of other types of investments. Potential for stability. Companies that consistently pay dividends may be seen as more stable and reliable investments. Number 6. Interest income. Interest income is a type of income that is earned by lending money to someone else. When you lend money, the borrower is required to pay you back the principal amount of the loan plus interest. The interest is a fee that is charged for borrowing the money and is typically a percentage of the principal amount of the loan. There are various courses that the rich and elite use in order to earn interest income, including depositing money in a savings account or certificate of deposit (CD) at a bank or credit union, investing in bonds, which are essentially loans that are made to governments or companies, lending money to friends or family members, investing in peer-to-peer lending platforms, allowing them to lend money directly to individuals or small businesses. Interest income can provide a number of benefits to the rich, including passive income. Interest income is a passive income stream, as you can earn money without actively working for it. Potential for growth. The value of your investment may grow over time, particularly if you reinvest the interest that you earn. Diversification. The interest income can provide diversification for your investment portfolio, as it can help to balance out the risk of other types of investments. Overall, interest income can be a useful source of income and can provide a number of benefits as part of a long-term investment strategy. Number 7. Capital gains. Capital gains refer to the profit that is realized from the sale of a capital asset, such as stocks, bonds, real estate, or other investments. When you sell a capital asset for more than you paid for it, the difference between the selling price and the purchase price is a capital gain. If you sell the assets for less than you paid for it, the difference is a capital loss. This is one of the prime sources which the rich earn money from. There are two types of capital gains: short-term and long-term. Short-term capital gains are realized on the sale of assets that have been held for 1 year or less, while long-term capital gains are realized on the sale of assets that have been held for more than 1 year. In general, long-term capital gains are taxed at lower rates than short-term capital gains. Capital gains can provide a number of benefits, including potential for financial growth. Capital gains can provide an opportunity for financial growth, as they can result in a profit that can be reinvested or used to meet financial goals. Diversification. Capital gains can provide diversification for an investment portfolio, as they can help to balance out the risk of other types of investments. Potential for stability. Capital assets that have the potential to appreciate in value over time may be seen as more stable and reliable investments. Capital gains are one of the key factors in deciding the net worth of an individual, mainly the rich and the elite of the society who use it to get richer and richer. This is the list of the top income streams that the rich of our society possess, which makes them financially independent. How many income streams do you have? Let us know in the comments down below.